There's a couple of things about financial markets that are very predictable over time, and that is watching things like speculation, leverage, these type of things. And when you get into phases of the markets to where reality gets detached from fantasy, so to speak, and that's much the case of where we are today. I was just talking about the detachment from the economy, right? Lots of people running around right now with headlines out there. The stock market's not the economy. Yes, it is. Yes, it is. Because the stock market is simply just a reflection of companies that operate within the economy. And just momentarily put these two things together. If you don't spend any money, right? Let's just say everybody in America decides they're no longer going to buy an Apple iPhone or an Apple product, and we're all going to buy the Brent phone. What happens to Apple's earnings? And if that happens to Apple's earnings, what happens to their stock price? So to say something as silly as the stock market is not the economy, if anything that you read starts out with that sentence, just put it down, because that is absolutely ridiculous. Because the companies that make up the economy are represented by the price of their shares in the index. So we're going out, and restaurant 1 packed, restaurant 2 packed in line. Finally went to one of our restaurants, and there was still a line, but it was very short and easy to get in. So we stopped and ate there. But you get inside, and of course, it's like, wow, man, parking lot's pretty full. Line outside the door, they must be blowing and going. Get inside, every other table's empty. And the point about that is there's a difference between reopening and recovery. We've reopened the economy, so the third quarter GDP is going to show this very sharp gain from reopening. We go from, if your normal table flow at a restaurant or your normal business is 100 customers or $100,000 a day in revenue, however you want to measure your normal business, and you go from 100 to 0, that was the shutdown. Because now you got no customers, right? Nobody can come to your shop because we're shut down. And then we say, okay, now you can reopen. And you go from 0 to 1 customers or 0 to $1, right? You've had a 100% increase in sales, right? So when you see a lot of this economic data, survey points, they say, well, how's your business doing? Man, we're doing great. We're up 100%. Yeah. That's the issue.
There is a new House Ways and Means Committee bill.
Yeah, let me just tell you what that means. When there's a House Ways and Means Committee, it's probably something you're going to lose money on. But okay, let's go with that.
It's ways that they take your means.
Exactly.
Well, it's likely this may not amount to much, right? Because we've seen many of these bills come through, not a whole lot behind them. But, last year, so we had the Secure Act back in December of 2019. So setting every community up for Retirement Enhancement Act. We know that there's a lot of that did not do just that. Like you mentioned, Lance, it actually takes from you. So that was where the death of the stretch IRA occurred. So one thing that we also saw then was that they changed the RMD, required minimum distribution age, for 401ks, IRAs, retirement accounts from 70.5 to 72.
But hold on a second. Just for people who don't understand, you're throwing out all these acronyms and stuff. Look, I meet with people all the time that have no idea what RMD stands for, and they have to take it. They have no idea what it is, but they have to take it.
It's your required minimum distribution. When you reach the age that they're requiring you, which was 70.5, now it's 72. The new bill is saying it's going to be 75. You must take a certain amount. They have a divisor that the IRS gives you each and every year that you will divide your account balance on December 31st by. And that is the amount that you must take. They do this, so essentially those funds must be taxed at some point. So remember, most of these funds are all pre-tax.
Can I ask you a question, though?
Yep.
There's something about this. This has always bothered me about RMDs. First of all, they allow you to save into your 401k plan, like Danny said, right? Your 401k plan, or you contribute to your IRA. Well, first of all, they limit you on how much you can save, right? They say you can only save, $20,000 a year or whatever into your 401k. You can only put $5,000 in an IRA. And then we complain about the fact that most people don't have near enough savings in retirement, but they limit the amount you can save. Oh, why do they care? I mean, they care because they want your tax dollars, right? But this is the real reason. But can I be president for a day? I would remove all those limits and say, look, save as much as you possibly can. Save as much as you want. It makes the economy better. long term because it takes less dependency off social welfare in retirement. The other thing is get rid of these RMDs altogether.
I agree.
You got to get your taxes at some point, right? The whole point's to tax. And you tax it if somebody dies and passes it to their kids instead of having these 5-year withdrawals issues. Let it go 100% to the kids on the day of death. Tax it. Be done with it. I remember my parents selling my grandmother's silver and those type of things. But people don't, a lot of people don't know the story of the Hunt brothers, Bunker Hunt in particular, who tried to corner the silver market. Why are we talking about this? Is because there's a lot of similarities between what happened to the Hunt brothers when they tried to corner the silver market and what happens in markets today more and more because of options trading, et cetera. So, when you go back and read the story of the Hunt brothers, they were trying to corner the silver market. They thought they could get it. They could buy enough silver to basically own the market. And they actually got the price of silver up to $50. Silver is in everything. We started seeing people back then as prices got higher and higher, they were scraping the back off and a lot of people don't remember this. They either used to take a picture with a Polaroid camera and it would spit a picture out, and then you'd wave it in the air for about 5 minutes until the picture emerged. Well, on the back of that Polaroid film was silver nitrate. So people were actually scraping the back off of Polaroid film. They were selling their mother's silver. They were taking the silver out of their teeth. I mean, at $50 an ounce, it was very lucrative to sell silver. Well, what the Hunt brothers never counted on was all this other silver that was out there coming into the market.
The reason we picked that story is because it's somewhat similar to what's going on with these, what we call gamma squeezes today. And that's where these big investors buy a lot of stocks and then they use options. Essentially, it's a form of margin. It's a way to own a stock, but with a fraction of the cost. So you can buy options on Apple, which is trading for over $100, right? And you can buy options for a couple bucks. And you buy one option and control 100 shares and it costs you at $3 would be $300. So you can play the same game. You buy the options, and who's going to sell you the option? It's the banks and brokers and dealers. So they're on the other end of that trade. What the lesson of the story is, don't go up against the banks.
It was the rivalry game this weekend in Katy. It was Katy High School versus Cinco Ranch.
Yeah.
Right? So this was the big high school showdown. And it's particularly big in our household because my son plays weak safety for Cinco Ranch, and my daughter goes to Katy High School. So it's a big inter-rivalry household.
Yeah.
Yeah, and it wasn't pretty. It was a blowout, 41-0.
Oh, man.
Katy over Cinco.
Yikes.
Yeah, it wasn't good. It pretty much looked like a Houston Texans game. I mean, it was pretty bad.
Now that's bad.
It was pretty bad. So, a couple of picks.
Yeah.
It was awful. But anyway, it's great. Go out there. It's kind of an interesting sensation, right? Because you kind of want both teams. It doesn't really matter who wins. You're happy for one, but you're sad for the other. So it's kind of a really interesting emotional dynamic. But
so did you have to broker peace in the house over the weekend afterwards?
No, I just set them both down and I said, y'all be nice to each other. I grew up in that same household.
Yeah.
Right. So when I was growing up, my mom graduated from the University of Houston.
Go Cougars.
She had a master's in English from University of Houston. My dad graduated with a biology degree from Rice. So every year, when it was the Rice Cougar game growing up, huge inter-rivalry at the house, right? So I grew up with that whole dynamic. So I just passed it on to my kids, and I was like, y'all be nice to each other. And then my daughter's like, why? But I'm like, be nice. Just be nice.
It's good practice for next Wednesday.
Yes. We'll see how it goes.
Just saying.
Okay. Everybody should learn, right? This is how we should treat each other. Be nice. It doesn't matter who wins. Be nice.
It's a teaching moment.
Yes.